So there's some of the miscellaneous rule about the bills of exchange in the promissory note, right? Is there any doubt till now, Samvit?
No, sir.
Are you sure?
Yes.
More of remembering the definition, huh? This chapter is like that. Give it a try, okay? If we talk about the what are the miscellaneous rule, as
Okay,
defined by
sir.
the conventions, a bill of exchange is a written instrument which contain an unconditional order. Conditional order means unconditional means there is a no condition attached to it, right? It does mean if it is issued, in that case it need to be payable, huh? Whereby the drawer direct the drawee to pay us definite sum of money to the payee or to his order. So either to him or to someone who is he's ordering, right? Which is payable on demand or at a definite time, is date and signed by the drawer. As per the convention, a promissory note is a written instrument which contain an unconditional promissory promise whereby the maker undertake a pay of definite sum of money to the payee or to his order, is payable on demand at the definite time or date and signed by the maker. So these rules are from the UN Convention of the International Bills of Exchange and the Promissory Note. The bills of exchange of the promissory note must contain the words international. They should must contain the bills of international bills of exchange or international promissory note respectively. It should not, because ultimately if you're removing the international, in that case there is also something known as in bills of exchange, right? But in the case of the international payment, you have to ensure that you're writing the international, okay? Both parties to the bill must be different state. Different state means different country, yeah? If there is a different if there is a difference between the amount stated in the number and words, the amount stated in words will be payable. If the currency of amount is not specified or in general, then rupee is a different from the rupee is a different currency in India, Pakistan, and Sri Lanka, but has the same name. The amount is assumed to be the currency of the state in which the payment is need to be made. So where the payment is need to be made, we will consider. For example, if there is a payment of that need to be made in the Sri Lanka, so the amount that we're going to take up in Sri Lanka will be the one that we are going to consider by the rupee name, okay? In the rupees. If there is an interest payable on the bills of exchange, it is charged from the date of the instrument, unless mentioned otherwise. It is payable only if the interest rate is specified. It may be fixed or variable interest rate, right? Then you need to know that bills of exchange is payable on demand unless a specified date or dates of the part payment is specified. An instrument made by or the payable to the several parties payable to anyone who is in payee or any of the payee in the process of the instrument. It will then be distributed among the all the people who are in the process, right? The holder of a forged BOE is a valid payee. Okay. What do you understand by the forged? I also need to check that. Basically, I don't know, but need to be confirmed, right? Creating, altering, or using the false document. So ultimately, the false documentation. Okay, fake one. An endorsement is in blank is when the maker only signs the instrument without naming any payee or makes it payable to the holder. Whereas a special endorsement contains the name of the payee in addition to the endorsement sign. A bill cannot be endorsed further if it is contain the following item. So if any bill contain this of the following item, in that case, the bill cannot be endorsed. Non-negotiable, pay X only, not to order, not transferable. Okay. So in that case, the bill will not be endorsed, will not be issued. Okay. Or will not be paid. Endorse means that for what it has been made will now be fulfilled. If we talk about the rule for the endorsement, so it must be an unconditional. It will consider unconditional even if it is a condition. If it is a condition, in that case, it will also be considered an unconditional because this is the characteristic, right? It must be for the entire amount, otherwise it is ineffective. It arises in the order in which it appears on the instrument. Where there are where there are multiple payment in an instrument, in that case, it will be following the same sequence which has been given or which has been that they have been presented, right? Unless agreed otherwise, an endorser has an implied responsibility that instrument is of the good quality, isn't forged or unauthorized, isn't fake documented, right? False documentation. They are not any known fact that could be impaired in the payment to the endorsee. It does mean they should not be anything that could make it away making a payment to the endorsee. A holder has a right to an instrument unless holder would be having a right to the instrument if he would be doing any of the three things. In that case, the right would be taken away. He takes the instrument knowing that another person has a valid claim to it. He obtained the instrument by the fraud. He obtained the instrument by the theft. A person is liable to bill even if it is signed with a different name. If a person's signature is false, means fake, false, he is not liable to pay the bill. If a bill is materially alerted, the person who signs the bill after the alteration is liable for the bill, because ultimately, once you made a bill, now you're alerting, and after the alteration, whosoever is signing that need or that will become the liable. Okay, a bill can be signed by an agent of the maker. Then you need to know that instrument signed by two or more maker can be presented to any of the makers unless mentioned otherwise. If the drawee and the payee of the instrument is that, the instrument must be presented to his legal hearings or the executor of the state, right? An instrument payable on a specified date must be presented on that day or within business two business days following, right? Within the 2 days, 2 business days. In that case, you will not be counting Sunday and Saturday, right? An instrument payable on the demand, it must be presented within the 1 year of its date. All of the term and condition, guys. This is more of this typical chapter. That's why the reason I have taken this at the last. An instrument must be presented for the payment at the place specified in the bill. If no place is specified in that case, it is will be the address of the drawee mentioned in the instrument. Now, what do you know about the drawee? Remember the definition that we have seen? Drawee, drawer. Huh? Who's the drawee?
The
Buyer.
one who like that.
Okay. Is it okay,
Yes.
Samit?
Yeah.
Then you need to know that the convention allow 4 days to make a protest for the breach of the contract. If there is a breach of the contract, in that case, you have 4 days to make a conventions of it, right? Then you have 3 case studies that you can do it try by yourself. I just want you to go through it this quickly. The letter of credit is another type of the letter that are used when the buyer buys goods from the different country and hence might be uncertain about the reliability of the goods and delivery. The seller also would be skeptical about receiving his payment. In that case, you will be given the letter of credit. Therefore, to build the mutual trust, the buyer asks his bank to means who is the bank of the sending mega. The buyer asks his bank to send a letter of credit to the seller bank, receiving bank, who is going to receive the money. This LOC guarantees that the buyer bank will make the payment to the seller bank. Once the seller completes his part of the trade and the meet condition mentioned in the letter of credit, this LOC, once received, assure that seller that he will be surely getting his payment in full and on time. So they are the 4 parties to the letter of the credit: the buyer, who is known as an applicant; the buyer bank, which is known as an issuer or issuing bank; seller is basically the beneficiary bank, and it is in so the seller is basically the one who is in known as in the person who is getting benefit or the beneficiary, and the beneficiary bank will be the one who will be the one who will be receiving or confirming the payment after receiving on the at the side of the seller. Then if we talk about the letter of credit, the same thing, it ensures that the seller has performed all of the required underlying sales contracts. So whatever the term and condition has now been fulfilled by the seller is an autonomous transaction. According to the principle of the autonomy of credit, any condition is underlying contract are relevant, right? So autonomous transaction means transaction. So more of an into interdependent, or what we can say independent contract, right? Transaction. And this ensures that when it ensures that the buyer wants to ensure satisfy from the payment is made must be stipulated in the letter of the credit itself. And this is to ensure that it provides the security for the seller. Why? That's it is why it is given, because ultimately the seller would be in a doubt whether he would be receiving the payment or not. Has it promised that if the appropriate documents are presented to the bank, the seller will receive the payment. And once it is also ensured that the seller is fulfilling all the term and condition which are there in the contract, right? Then then you will see that it provides security for the buyer that he will be receiving the goods that undertake has in to undertake the examine the documentation to ensure that all the appropriate documentation are tendered. transfer the risk of the non-payment to the buyer bank has long the seller fulfill all his obligation, as the bank is bound to pay the money or presentation of the documentation, even if the buyer does not pay the bank, because ultimately the bank has given their commitment, and is therefore the most secure form of the payment for for the seller, and other than the cash in advance, right? Because ultimately bank are the legal terms, right? If the bank is committing you for the payment, in that case it is very rare that bank are not going to pay you, right, back. So what are the procedure that you need to do? Look forward to create and use a letter of the credit. The following step would need to be taken: that the exporter and the importer agree the term of their contract. The buyer applies to their bank for the letter of the credit. The buyer bank, basically the issuer, issue the letter of the credit and send it to the seller bank, advising bank. Advising bank inform the seller that the letter of the credit has now been opened in his favor. The seller will be shipping the goods, right? The seller present the information required of the letter of the credit, such as the invoice or the bill of lading, to the advising bank. The advising bank check the documentation that are collected once, and if so, the pays the seller. That in case the advising bank forward the documentation to the issuing bank, and then the issuer, basically the one who is in the buyer bank, will check the documentation are corrected once, and if so, the payment, and if they are corrected, in that case, it will be going to be made the payment to the seller bank. See, you can see the transfer of the money is basically taking place between the bank, right? Between the buyer bank and the seller bank. Because ultimately the buyer and seller can go from there, but otherwise you will see that then the issuer debits the buyer and release the documentation to the buyer, including the bill of lading, so that the buyer can obtain the goods from the carrier, right? If we just talk about what are the type of LOC are there, so the letter of credit are the one would be recoverable, irrevocable, unconfirmed, confirmed, standby, revolving, transferable, back to back. Need to learn this definition, right? Need to know what are these terms are. So recoverable means these can be cancelled anytime before the buyer makes the payment. This it can be done without the consent of the seller and hence nullify the security of LOC. Nullify means cancel out. Okay. Therefore, they are very rarely used because ultimately seller would not be ready giving you the goods on this term. Hana? Irrecoverable means these cannot be alerted or cancelled without the consent of all the parties involved. Unconfirmed means these are sent by the advising bank directly to the seller without a guarantee of the payment, but the confirmation that the letter is valid. If we talk about the confirm, this include an additional security whereby the advising bank assure to pay the sum as long as proper documentation are presented by the seller. The confirming bank issue charges usually charge some of the fee for it, right? Standby means it is used when the payment is made using a reliable, less secure method of the payment. If the payment fails, in that case, the seller can execute the payment using the LOC. If I talk about the revolving, so it is used when the seller commodity is recurring shipping to the buyer. It is just to ensure that it is used recurringly instead of making the multiple LOCs for the different payment shipment. Transferable means as per the seller has the right to request the paying bank to make the payment to someone else mentioned by the seller or as per by command. Back to back, it issue by the seller has a security to issue a LOC to his supplier. I know that many of the things might not have been clear because ultimately these are all the definition, right? There is a no explanation I could go to give you as a point of the example, Hana. So just learn the theoretical thing which is there. And if you would be having any problem while understanding the things, do let me know, then I will help you with the same thing, okay? Is it okay?
Yes, sir.
Hmm. Then what do you understand by the letter of the comfort? More of the theoretical, or just learn the definition. These are the two things which are going to be tested there, okay? It is a statement of intent by the third party. Yes, this would chapter would come for 8 to 10 marks in the paper, but ultimately more of the side that you will see, this is will not be creating a case sort of the question, but if there would be any, then they will be looking for the definition, right? Hmm?
Yes.
Is huh. So it is a statement of intent by the third party ensuring the creditors that will be the third party will ensure that the payment is going to be on its debtor debt. This is issued by the parent company to encourage the lender or the client to extend the credit to its subsidies. Example would be incorporating the Alphabet could issue the letter of the comfort for the Google client. Alphabet is like a parent company, right? Hana? So it is
Yes.
basically when the parent company is giving the letter to the client of the subsidy client. Huh? You know, the parent company is basically the one who hold maximum number of the shareholder in subsidy company. So they are just giving the letter of the comfort that okay, this is the part of our company, this is the part of our group, so you do not need to worry. But this is to ensure that this is mainly a statement of intent, and they are not legally bound to do so. Okay, they are saying that we are there to support, but they are not legally bound to do so. Okay, so in the case of the defaulter, the subsidy bank itself, or basically the subsidy will only be the one who will be liable. So the issuer of the letter can't be held accountable in the court. Issuer of the letter will be the one who's in parent. Okay. The example: Calvin Banson lent 5 millions to Malaysian Mining Company and were provided with a letter of the credit comfort from the Malaysian Malaysia Mining Corporation. So in the case, the Malaysian mining company would be only responsible, right? The Court of Appeal held that the specific letter of the comfort in the case was not binding, apparently for the reason that the plaintiff was aware of the risks of the natures. Plaintiff means the claimant, right? Okay. So you know the claimant and defendant. In this international payment or international transaction, this is known as an plaintiff. And charge additional interest on the loan. Okay. Of letter of comfort and charge additional interest on the loan. Nonetheless, the court held that in different circumstances, a letter of comfort could form the basis for an action in the breach of the contract. In effect, it is a reference to the bank from third party on the behalf of the buyer who wished to make the payment. That was about your chapter number. More of the typical chapter, more of the thing were there as a mean of learning the definition. Huh? There was nothing like that we haven't done. And what I can say that we have spent lesser time in this chapter because more of the definition we just have completed it from the purpose of completing it, but you need to know the definition. You need to learn the definition, and I think you would be doing so. Okay. So with this, we are done this chapter, and from tomorrow onward,